most of my viewers are millennials, and we would have been born during the last downturn. So we haven't even seen what a proper housing correction looks like, a peak to trough, counter-cyclical reset of credit cycles, of the housing economy. And I'm going to do a video later on what that looks like, examining all of the past housing corrections in Canada. But what I want to talk about today is two very specific things. The first one being mortgage fraud. And mortgage fraud fascinates me, especially in the context of this discussion around housing bubbles and UBS's housing bubble index, because at the beginning of The Big Short, a movie which is about the housing bubble in Canada popping, Michael Burry makes a statement. Michael Burry was one of the most famous Canadian housing shorters.
During the 1930s, the housing market collapsed nationwide. I mean, for instance, one of the hallmarks of mania is the rapid rise in complexity and the rates of fraud. And did you know that they're going up?
So one of the hallmarks of a bubble is mania, and one of the hallmarks of mania, he says, is the increasing complexity of fraud. And at the beginning of The Big Short, that's trending up. In the US, there's this concept called ninja loans. Ninja stands for no income, no job, no assets. And in Canada, we do basically DIY ninja loans here. In a lot of cases, we're seeing something that's called fraud for shelter. This is a symptom, from my perspective, not a cause of the problems that we're seeing in the Canadian real estate market in Canada. But CBC recently announced that they're actually going to be doing a mortgage fraud caught on camera undercover investigation in what's happening in the Canadian real estate market. And that's coming out on Friday, October the 14th. And I will do a little bit of an update on the findings, because I have no idea what they're going to be reporting. But when I mentioned this to the community and to TikTok especially, a lot of young people were responding saying, yeah, have you been living under a rock? This has been happening forever. And I know that. I understand this is something that's deeply entrenched in our real estate market. And so the question becomes, why is it happening? And my perspective is it's a symptom, not a cause of what's an issue. I don't think that this is what's pushing prices up, but I think people are doing it because we have this sense of FOMO. We have this deep entrenched sense that homeownership is this necessary piece of being Canadian. And the other element is that we are also seeing, as a result of monetary policy in the global pandemic, we're seeing what I would call a K-shaped recovery. So half of the population goes up in net worth and half of the population sees their net worth decrease. Monetary policy did that, and it did that very much through the inflation of assets by decreasing the cost of credit. So people who owned homes saw their net worth increase. In the US, this led to a lot of people feeling that their upward mobility was sacrificed. And so that's where you get people levering up and buying options on meme stocks like GameStop or AMC, because the only way that you could possibly find success or find that upward mobility was to take a huge amount of risk. And in Canada, our retail trade, our get-rich-quick scheme is housing. It's real estate. And so people are jumping more and more into housing homeownership by any means necessary. In a lot of cases, that means committing fraud. Fraud for shelter is one of the big things that we're seeing happen. This is basically where people lie about their income, and it's supported by, it's happening at the banks, at the big six bank branch levels. It's happening at mortgage brokers. It's happening with real estate professionals, as we're going to see in the CBC report. And the difference, the distinction that happens between when somebody commits fraud for shelter is that that's soft fraud in Canada. So we have soft fraud and hard fraud in Canada. Soft fraud is basically you've done something fraudulent, you've broken the law, you've committed a crime, and nobody gets hurt. It's a victimless crime. There's no financial loss. Once a financial loss happens, it becomes a hard fraud. And in this situation, that would be if you failed to pay your loan, or you default, or your home goes into a negative equity position. And if those things happen, now all of a sudden you've got somebody who is in a position that they could be charged or go to jail. And this is why a lot of individuals are saying, well, fraud for shelter, those are probably the borrowers who are most likely to pay their mortgages because they know that there's serious consequences if they don't. And that's true. But the challenge is that we are in a declining housing market, and we saw this in the US. There isn't really a risk of liquidation in Canada because we have a power of sale system rather than foreclosures that you hear about in the US. Most Canadian provinces use power of sale, which protects the borrowers. And I'll do a whole video on the difference between power of sale and foreclosure in the future. So this, to me, creates this system in which we could end up with a pent-up supply situation where if somebody says, okay, if I don't pay my mortgage, I'm going to commit fraud, but I can't, or I'm going to commit hard fraud now, I'm going to commit a punishable fraud. They've already committed soft fraud because we're seeing this almost embedded impoverishment happening. We know there's a correlation between crime and poverty, and you're seeing basically people being pushed down by that K-shaped recovery I described. I think it's important to examine because UBS is saying that we have the biggest bubble index the biggest bubble in the world based on their index. And if we're in a pent-up supply situation, if all of these borrowers now say, okay, well, if I can't pay my mortgage, the only thing I can do to avoid being in a punishable fraud situation is to sell my house. And now you've got a real supply flood potential to happen. And you combine that with all of the sellers right now are saying, oh, we're just going to wait and see what happens with the economy. And I think we actually have a very real pent-up supply situation happening in the Canadian real estate market right now. Okay, so the UBS Bubble Index came out. This is basically an index that measures the frothiness of different real estate markets across the world. It uses a couple of different things. Basically, it measures price, and that price relative to income and rent, so the ability for a property to service its valuation. And then it also measures the mortgage and construction industries. And I'm going to go through and show you why, at face value, Toronto's market doesn't really actually look that bad based on these price metrics. We're actually, by comparison to a lot of other world-class cities, we're actually not that bad. But it's the challenges that we have in functioning properly. We have a broken industry, a broken real estate industry, and our supply delivery is too slow, and our mortgage industry is too flawed. And those are the two elements that really gets us on this bubble index. So, first page, there's a map that shows all of the different cities across the world, and you can see that both Toronto and Vancouver are red, and Toronto's number is 2.24, and it's basically an arbitrary index number, but I'm going to show you now what that actually means. So on page 2, it says at the tipping point. So you can see here Toronto ranks number 1 above Frankfurt, who was last year's leader in the UBS Global Real Estate Bubble Index. Toronto was also first in 2017, and in 2017, as I mentioned earlier in this video, our market corrected 30 to 40% in the Greater Toronto Area. So they are relatively good at finding these correlations because we are in the middle of a relatively historic price correction in Canada right now. Looking at nominal price growth, it says strong nominal price growth on this heading here. Toronto is not exceptionally high on this list. I believe we're 6th or 7th on this list here, and there are other areas that had higher year-over-year price growth. The number that they're using is around 10%, which from my perspective, I do think Q2 of 2022, we were probably higher than 20% year-over-year growth. So they're either using they're also incorporating condos in this data, or they're using the prices after valuations had started to come down, because we have seen prices come down 20 to 30% in the Greater Toronto Area. So if we get to the Canada page here, you can see real house price levels in Vancouver and Toronto have more than tripled in the last 25 years. I'm a little bit older than 25 years, but I was basically born at the peak of the last housing market. And so most millennials, and even most older millennials or Gen X's, really haven't been actively involved in the economy during a down cycle in Canadian housing. And so we have this feeling of invincibility that house prices can only go up and that there's no counter-cyclical event that's going to happen. But if we look back at the past several housing corrections in Canada, these are long, drawn-out processes. The one that happened starting in 1989, which I was born shortly after that, started in 1989, and house prices didn't stop falling until 1994. In 1994, house prices started going up, and it took until 2002 for them to reach their nominal price that they were at in 1989. So a 12-year recovery period or 13-year recovery period to get back to that 1989 peak. But if you adjust that for inflation, because what happens, and this is one of the big things that we're hearing about right now, inflation, interest rates. If you adjust that for inflation, it actually took until 2012, so like 23 years or 22 years for prices to get back to where they were. So it's worth thinking about what those past cycles look like in the Canadian market and whether or not we're seeing the signs that we're in the middle of an unwinding similar to one of those counter-cyclical events. A lot of people will say, oh, it's different now because immigration is higher than it's ever been. Well, immigration grew from 89 to 94. The last time we set an immigration record was in 1989, and we just broke that record for the first time since 1989. So house prices are measured in dollars, not people, right? And so it matters how much money those people who are immigrating have and how much money the buyers in the market have. And I don't think that we're immune. I don't think that this invincibility is something that Canadians should be feeling. I'm going to jump now to the price to income, which is really, from my perspective, where it shows how poorly Canada is going to do. We don't have the incomes to substantiate the valuations that are here. Canadians simply cannot afford to pay or buy homes. And while we are outperforming, I think we're 20th on the list on the price to income. Behind Stockholm or Los Angeles as an example, and just ahead of Boston or San Francisco. We do need to see wage inflation happen in order for Canadians to be able to afford and properly participate in the housing economy in Canada. And the central bank, the Bank of Canada, seems hell-bent on basically making sure that that type of inflation doesn't happen. So they've ignored every other type of inflation until we get to wage inflation. And now they said every other type of inflation was transitory, it wasn't real, they could get rid of it, and now all of a sudden we're looking at wage inflation, and now they're taking their mandate to control inflation exceptionally seriously. And the Bank of Canada literally even went out of their way and out of scope to say to employers, don't raise wages. So it's, again, more further suppression of that lower line of that K-shaped recovery that we're seeing happen in the Canadian economy. Jumping now to the price to rent page on the UBS bubble index. Similarly, Canada's 15th on this list. Toronto is 15th on this list. We did jump quite a bit, and so that's one of the challenges. Rents just aren't substantiating the prices here, so it's not a highly investable market, and so this is why you're seeing more speculative nature in Canadian real estate, because people can't make money off of yielding. So they have to make money off of prices going up. And so more and more speculative investment rather than yield investment. Going to jump now to the Global Cities Overview at the end, which summarizes two of the important parts that aren't, it summarizes all of the elements here that show us why Toronto is ranked number one in the world for the UBS Global Real Estate Bubble Index. So why we have the highest likelihood of being in a real estate bubble. And so the couple of things that I've already covered is price to income, price to rent, but there's two other elements. One is mortgages and the other one is construction that UBS doesn't really elaborate on in the report. So we're kind of left to do our own research here. And so there's two elements that I'm going to jump to very quickly to show why I think UBS ranks Toronto as the worst, because we've just seen that Toronto isn't the worst on price to income and it isn't the worst on price to rent. Why is it the worst? Why is it so bad on mortgages and construction? And so if we jump here to the RLB Crane Index, I'm quickly going to cover the construction side of things. So Toronto has been leading this index since 2015. We have the most cranes in the sky by an absolute long shot. Like, there's 220 in Q2 of this year. There's 225 cranes in the sky in Toronto, and that number actually decreased. It's 245, and that number decreased by 8.7% since the last report. And this report says there's been significant decline in new condo sales and mixed-use projects, as well as staffing challenges related to a strike by Ontario construction workers. The industrial market continues to be a hub of activity as the GTA's demand is centered on logistics, distribution, manufacturing, consumer goods and services, and retail e-commerce businesses. The Ontario government budget promises significant investments in transport infrastructure, which will benefit the province's economy. And we've also seen the Ontario government mention trying to solve this housing affordability crisis. But as it stands, we are not exceptionally good at keeping up with the demand, and we're immigrating more and more people. We've just hit record immigration numbers, and we can't bring on enough supply in the Canadian market to meet that demand. Finally here, the mortgage element. I'm just going to go through a quick article by RBC, which says buying a home has never been so unaffordable in Canada. And it said affordability worsened everywhere in Canada. And a lot of this is because of the speed at which, you can see here on this chart, the speed at which our interest rates increased. And because our mortgage market is not, we don't have long-term mortgages. You can only fix an interest rate for 5 years at a time. And we're seeing more and more people, similar to the fraud for shelter, you were seeing more and more people go towards variable rate mortgages because the interest rate was lower, so it would allow them to qualify for a higher amount. And so you're pushing more and more people into these riskier mortgage products, and more people are actually going out of desperation to commit fraud in order to get houses. So these to me are symptoms that our market was fundamentally broken. So I'm going to be watching very closely, especially on the mortgage side. I'm going to be watching this CBC report that comes out on Friday, October 14th. Hopefully circle back with a couple of findings, and I'll let you know about those next week.